And the Friday live stream is in the house. Ryan is here for the fastest 60 minutes on YouTube. Welcome to the Independent Investor Channel. My name is Ryan. We are broadcasting live from New York City. Drop your comments in the thread here if you have any questions whatsoever. I'm one of those folks that are trying to put a goal-oriented program in place. For myself, it's already in place. I share that openly. We're going to share some of those goals tonight. Some of those will hit home with you. Some of you will probably be motivated by these, but looking to empower one investor at a time who can make their way to the Independent Investor Channel and understand that this all isn't about generating hype around popular topics. You'll notice a theme in investing when you're covering financial markets that it's super easy to talk about the hottest, most on point, most on topic thing when it is socially acceptable to do so. Just a few months ago, we were talking about oil. Oil was the big trade. Oil was where you wanted to put all your money. Oil was where you were wanted to be positioned going into 2024. Chevron, ExxonMobil, and BP, I believe, are at 52-week lows as we speak. Over the last 5 years, we extend it to multiple fads that have come and gone, that have been politically correct to discuss, that have misled investors, the ARK ETFs, who knows if they'll ever crawl out of their dungeon that they've put themselves in. I have nary seen nor heard hide nor hair of Cathie Wood. Certainly YouTube has calmed down on hyping these false gods. That's for sure. Look, I'll level with you. The second you can figure out that if you're part of the independent investor community, yeah, you can log in on a Friday. You can catch me live and unscripted, which is cool. It's a cool thing about social media. There's nothing cool about me. There's nothing special about me outside of the fact that I will put the focus on you. I will insist that you look at your financial well-being and your goal setting and acknowledging those set goals as commonplace. For those of you who operate with a little bit of chip on your shoulder, I think you'll find this to be a very inviting channel in that I expect nothing from you. You will not get a bill in the mail for becoming part of the community. If you have found your way to the Independent Investor Channel, congratulations, because it is a difficult channel to find. I make it that way. I do not feed the algorithm. I do not play and banter to the YouTube demands over me. I control my creative content on the channel, and you're the ones that benefit from it. The unfortunate part about it is we can't meet the masses. Now, for every one person out there that can benefit from the message, there are 999 retards out there that are going to actually take and bastardize my message and not like me, think I'm a pompous, confident person, which I absolutely am. Absolutely. Call me what you will. It is social media. That's for sure. I've grown tough with my rhino skin over the last 7 years of doing social media, and quite frankly, it's those elements of social media that I've learned to just despise and discard. Quite frankly, if there are 100 people that make their way to the message and they do discard the message, it is their loss. It's that simple. I provide tangible results about what's going on with my own particular portfolio, my testimonial that I share. Right, we've got some milestones. One that I'm pretty proud to share with you guys. I'm actually paying a car off. I actually made it to the end of a 5-year term, which feels awful good. It was a new car. It's not something that I did do before. The last 2 cars we've bought have been new. It is something that is not advisable, as you do lose some off of depreciation. But the problem is most people will buy a car and they'll trade it in a year later. It's dirty. I don't want to vacuum it. So you go trade it in and you want to get a new one, or the newest version comes out. You got to get a new one, or the headlights go out. And you have no idea how to change it, or you're due for an oil change and you've went 100,000 miles without an oil change. And maybe you think that it's time to probably, I don't know, put your lemon on somebody else. I don't know. I'm a long-term buyer of my assets. Cars are no different. And I think I set myself apart in that application, in that cars will run for a significant amount of time if you just take care of them. And I have done indeed that. So when you do that, it frees up some surplus capital, which is something that I talk about openly on the channel, for the recipients of the message to try to self-identify as little as it might be or as much as it might be. It's great. It is certainly a scalable message to push out there. I won't tell you what to do because I don't have the answers, and neither does anybody else. What we do is we try to convey some rules and some governing. There's a few things that I share on the channel that I do. I started my own ETF, so that's kind of cool. For you guys that have been with me a while, you know that I do the dividend portfolio. That's a fun way of investing, and I've done nothing but make money with it. Go figure. Investing is like gambling, right? If you just fall head over heels into the investing swimming pool, you're destined to lose money, right? Over the last 10 years, I'm staring down a big $100,000 threshold in one of my many accounts. That is all tax protected money. For you guys that enjoy the message, know what I'm coming from. A lot of you guys can enjoy a 401k, a 403b, a 457 for the teachers out there. I just happen to be involved in the thrift savings plan for government workers, and started the Roth TSP during the year of inception. Actually, I was one of the first ones when it was made available to investor. The TSP has been around since, I believe, the early 1980s, but up until around 2011, 2012 timeframe, they did not have a Roth IRA product. And that's when they came out with the Roth TSP, that of which I started contributing 2% to that, with a goal of having $100,000 in it by the time I retired. My friends, I'm 12 years away from retirement on a career that I'm very, very happy with, something that gets lost while I'm spending my time on YouTube trying to frantically chase down some idiotic pipe dream of becoming a YouTube superstar. I wouldn't be doing what I actually enjoy with my time, and that's actually time away from the sacrilegious social media. So for you guys that understand, I wasn't on Friday. I appreciate the leave. I had some family in town, and I do appreciate that. I had a great, great time. I watched some junior hockey. That was pretty cool, and just took some time downtown checking out the festivities when the crowds were kind of a little bit tame. In New York City, they can get a little bit out of control. Okay, for anybody who's been to the big city here, it's pretty crazy. And when you go after Christmas and the holiday season, you actually get to see the tree, the same tree. I walked by Bryant Park and there was nobody there this weekend. It was kind of funny. It was wall to wall people during Christmas, you know. No, but it was good times, and I do appreciate that. That's just part of my ask on the channel, is that I retain that creative content, and you're going to want to subscribe to the channel so you're made privy to the messages that I put through. If you're not careful, it'll go right over the top or in one and out the other, because I don't patronize people. I do not spoon feed people. I'm not looking to ride the wave of propaganda. So I don't really need anybody to actually agree with me on my philosophy. My philosophy, I believe, is right. I'm proving that I'm getting results. Someone would suggest perhaps maybe to come to me and say, "Hey, Ryan, what you're doing is completely wrong, insofar as my program makes more than you do." Uh, I would like to understand the details of that. I think all too often when you look at just below the surface, not even at the granular details, you'll find that this system is absolutely designed to take your money, okay, for your benefit, yes, as a secondary byproduct. But as a collective whole, retail investors are retarded. Okay. Retail investors have done nothing but prove to me beyond stupidity since I've covered financial markets, that we are the lowliest of lowly idiots when it comes to what to do in the stock market. And stock market's crazy because you can be a T-ball player and actually play in the major league stock market. It's amazing. You can have no skill whatsoever, think you have skill, participate, not as a ball boy, but actually face down major league hitters in the big league stock market. It is an environment fraught with um, very knowledgeable people, very naive people, very influential people, people who work for organizations as a part of a grander whole that is all aimed at selling propaganda to you in the end to get into your personal financial wealth, your household wealth, and somehow take that household wealth under the umbrella of comfort and facade that they are, in fact, looking out for your best interest. All right. We need to start challenge this idea that the financial planner professional is somebody that is going to give you that much more of a degree of a strategic edge. Why not challenge it? Hell, I could be wrong. Why not challenge it? Why accept it? Why accept the status quo? Why would you accept that a complete effing stranger who is operating under the title of a fiduciary has your best interest in mind? Why? More than you do, right? You know your social security number. They don't. That you know your goals and aspirations. They don't. They're going to try. They're going to sit down. They're going to run you through a Q&A and dialogue and try to get to know you and joke with you a little bit and try to understand and remember your kids' names. And they're going to send you a birthday card, really, to show you. Well, they're going to try to persuade you into thinking that they care. They don't care. Okay. When you do better, we do better. You guys believe that? You guys believe that? 99 people will watch the Independent Investor channel and they will go somewhere else because I am not talking about what is popular in the masses. I am talking about what is popular in the ultra minority. Ultra minority. Okay. Put a program in place to allow yourself to identify and stare down milestones like the first $10,000 of invested capital, perhaps maybe in the S&P 500. I don't know. Maybe find a good dividend ETF, SCHD. Just took a nice position in there, about 151 shares. Don't ask me why. 151 shares of SCHD within the Roth IRA, in addition to the $100,000 account. And it will get there probably within the coming month, 2, 3. I don't know, but nice to be staring down that threshold. Once that calibrates after a big day in the market today, market was up huge today. We should get a nice $1,215 push in it, put us at 9,800. So a couple grand away from that. A lot of people will ask and suggest, why do you share that? Why do you convey that? For you guys that have been with me for a time, you know that I earmark the 10,000 and the 1,000 and 500 as starting at capital, 2,500, 5,000, 10,000, 25,000, 100,000, quarter million, 500,000, and eventually the $1 million mark as the 11 thresholds of wealth. It's just a number, guys. Stay with me. There's nothing magic about it. Okay. The reason I do that is for the psychology of it. Okay. A lot of people have a hard time seeing themselves in some capacity beyond 10,000, I presume, of invested capital. And it is by nature of moving through those thresholds that you will have garnered the ample temperance and tolerance necessary to hold dollars in invested capital in the stock market. Stock markets will go up and down. I can guarantee you over the last 3 weeks, this stock market in January 2024 have absolutely shaken people from the stock market. And it's probably shaken people from the stock market who are like, hell yeah, I'm getting involved. This is my New Year's resolution, just like I'm going to be in the gym every freaking day, right? I wait, this is about the time, 3 weeks. I go to the gym every day. I went twice today. I go every day. This is usually the time that's the least favorite for me, because I usually need to get those people who have their New Year's resolutions that last about 3, sometimes tops 4 weeks out of the gym, and then us hardcore savages can get back to normal routine. Because people have a really, really hard time sticking with resolutions because they approach it the wrong way. They look at it to be an exercise, and they're going to go and they're just going to put their body through rigor instead of really looking at it like a lifestyle change, you know, understanding why you do it. Why do I go subject myself to the pain in the gym without understanding the payoff? I know there's a payoff. It happens afterwards. It happens during my day-to-day interaction at work. It keeps me calm. It keeps me healthy. I take great pride in understanding, look, if I'm going to go tomorrow, at least I'm doing everything I can possibly do to fight the idea that, I don't want to check out early, man. I'm having too much fun. And I expect you guys should be having some fun too, looking at your own personal portfolios and saying, yeah, Ryan, we're with you, man. We're also sharing in some of those thresholds that you're talking about. Maybe throw a thanks, and I'll thank you back because it wasn't my initiative. It might have been a little spark or motivation, might have been something I said, might have been, 68 videos ago or 412 videos ago when I talked about chewing Hubba Bubba all the time, right? That got you motivated to take a little different path, a little bit more attention to the financial stewardship in your life. Okay. A little less attention to that charismatic person times 500 that wants to motivate you in a certain way. All right. And very, very careful in making sure that you're defining your program as yours and not somebody else's. Okay. You can try to carbon copy. I'm going to share my Ryan's ETF with you. It's called the 123 ETF because there's 123 holdings in it. I'm going to share my top 10 and my top 20 stock picks tonight out of that dividend ETF. Why not? It was a dividend portfolio. Now I'm calling it an ETF. I built it myself. I charge myself nothing. Isn't that lovely? We got dividend renderings anticipated next year of $1,380.84 for just a little over $28,000 in that portfolio. We built it up since 2019. We started with $1,500. Yeah, that's just one of the many accounts. Incentive thresholds, right? Why do you think I'm having such a damn good time, right? Yeah. I do understand for that one person that does make their way to the channel and can get past my delivery. I try to be edgy. Okay. It wouldn't be very much fun if I just came on here and just slept 60 minutes. You wouldn't find any value in that. 60 minutes. You would have no value in that whatsoever. Right. So I have to deliver it a little charismatic. If I turn 99 people off, but I reach that one person that's like, interesting. Goals set and identify for myself. Right on. I don't want to end up in 2024 at the end a little bit different than I did the end of 2023. I was a fart in the wind in 2023. I was pushed and influenced in every way. I followed 672 YouTube influencers, and all 672 had a different idea about what was right for me. Maybe I need to look in the mirror and try to identify what's right for me. That's a hell of a concept, isn't it? Right on. For the one person that hears it, they'll get it. It's the very reason why I do the channel, to really convey what I consider to be the truth in the face of what I consider to be an institution that is absolutely designed not to help you, but to hinder and misguide you and sell you down the river on the river of financial propaganda. Be back with you in just a moment. A lot of people ask me, okay, well, what does it mean, Ryan? You're almost approaching 100 grand. I'll tell you how I did it. It's really simple. I'll give it away. This is actually information that is worth paying for. It's worth paying for. If I could go back and I was like 19 years old and I found my channel and I was like, well, right on, man, I got to join this guy's private group. And I'm here to tell you, just take a freaking time out. All you got to do really is just subscribe to the channel, man. It's free of charge. Don't waste your effing money. I don't need your money. I have plenty. Okay. Just spend your own money on you. You're fine. All right. The very value I have on the channel, it has already been defined long ago. All right. How do I do it? How do I do it? How is a new investor supposed to look at this thing and be like, I want 100 grand too? God dang it. Oh, I want 100 grand next week. Well, it may take a little bit longer than a week. I've done it in a little over 12 years. All right. That is not my only account, but I will tell you the secrets to how I did it. Um, I have a job. I've done YouTube for 7 years. I've done my job for going on 19. Never in those 19 years, never, not for a second, did I ever consider quitting my job to do this infernal machine? Never. Get a flipping job, find something that you like. I don't care if you consider playing guitar a job. You have to be really good at it. And you have to do something that's a really novel idea, and that's make money at it. If you're a painter, if you're an engineer, an electrician, a truck, whatever it is that you do on this life, get a mother flipping job. Okay? Get a mother flipping job. YouTube is not a job. Okay? It's not a job. Many will disagree with me. That's totally fine. I cannot stress enough the importance of me carving out my time on YouTube to the bare minimum enough to retain my sanity, because the rest of my time I'm hanging out with my awesome wife or my awesome kids, right? I'm spending time at the gym, and yes, I am spending time building a career, which I very much appreciate. Now, if you can resonate with that idea, great. I can tell you that's a direct contributor to how I've built that wealth up in that account. All right. I started with 2%. Okay. So the carve out from the paycheck is the idea of paying yourself first. All right. You will not miss that money. Okay. And it is just amazing to me how many people cannot wrap their mind around this concept, and they think about how much they're missing out on, and how many big screen TVs or how many vacations they're missing out on. I could go on a permanent vacation now with the money I have. I could buy 10 BMWs right now. Okay. Most people will aspire to one and never get one. Okay. I don't say that to be pompous, but you have to set your priorities up right. Me personally, guys, and I convey this all the time to the channel, I'm super simple fella. Super simple. I'm so simple that I don't even have money to buy socks. I'm barefoot right now, which is kind of a staple of the channel, actually. But to contribute to it every month and find that carve out of 2%, guys, right now I'm up to 25. So I do fund it a little heavier. All right. But there have been times during the evolution of Brexit, of the financial downturn of 2009, where I was invested not in this account, but over the course of, let's say, the last decade, where I've looked at that account and I've been like, what am I doing? If I had looked at the account in the acute, I would have quit. I would have quit. You get up to $27,822, and you're like, God dang, I'm freaking rich. God, this is freaking incredible. I want to buy a house. Want to buy a house, honey? I can take all of my retirement and put it on a down payment, $28,762. Put it all on a house. Boom, it's done. Scrubbed. Done. Because you've justified such expenditures and have not prioritized the importance of something grander. When I was at 60,000, you know, this is the no man's land, right? Where you step into this era of, you know, you get up to 60 grand, then it retracts back down to 52, and you're like, holy crap, this sucks. Or it retreats back to 42.7. I've been through every articulatable level in this portfolio. It's not even funny. You don't go from 0 to 100 grand without seeing some pretty incredible fluctuations. All right. Fluctuations in the account now, guys, that Having gone through that hundreds and hundreds, if not thousands to this point, fluctuations up 1,000. I've had $10,000 days. I've had negative $10,000 days. Many, many of them. Doesn't matter. Why? Because that's not what's important, right? It's like selling a duro at $1.20. If you're selling that stock because of the stock action, you're a retard. I, you're an idiot. You're that dipshit retail investor that I talk about. And we're all dipshits, me, myself included. As a class, we're idiots. We're all part of the GameStop, like screw Melvin Capital and ape shit to the moon and Elon Musk. We're all part of the retard community, all of us. So the further we can get from that like garbage that doesn't mean anything whatsoever, cryptocurrency scams, 80% of everything crypto, there is an element of legitimacy. All right. The Bitcoin ETF, I freaking get it. All right. But the more we can kind of distance ourselves from the flavor of the week, perhaps the better off we'll be. And it's amazing to me. I spend 60 minutes on YouTube, pretty typically once a week, talking about my very, very favorite asset, which is slowly making me rich. I don't have to get quickly rich. Let me just put a comparison on the table here. A Duro Clean technology. Last week I was up 25,000. Obviously, with the digression, we've come back a little bit. All right, 25,000. It's a quarter of what my entire Roth TSP has grown to after 12 years. And you might think, man alive, Ryan, that's incredible. God dang, you've been investing in a Duro for over a year. I want that type of return. Okay. I share both as an extreme on both ends. Okay. Extreme on one end that will get scrutiny and get scrutinized as a passive program. Yeah, buying and holding just doesn't work. I've heard that a lot now on CNBC, man. Pretty amazing. Buy and hold doesn't work compared to what? I'm sorry. It's working for me. I don't understand. What are you talking about? It's not working. Is it not working fast enough? Because I can tell you my stuff's working. It's working. Okay. Had it not been for the power of investing and investing in the stock market, you think a dumb schmo like myself would be come on and projecting to a YouTube audience this is serious net worth. This is serious. I work a blue collar salary. Okay. I don't work on Wall Street. Mhm. All right. I'm not the head of Bitcoin. It's a good Netflix show. Check it. I highly recommend it. You'll want to throw the kitchen table through the television at the end of it because if you had any faith in the justice system before, after watching Bitcoin, you will have zero. So congratulations. It'll move you one step forward in this idea of being a little bit cynical on a system that you probably have way too much trust in. Okay, so as of yesterday, maybe you need to start initiating this like empowering program that I talk about, right? Well, why do you do what you do? Are you serious? Don't you see what's going on? You think the middle class is going to exist in 20 years? There's going to be the ultra rich, which is happened. It's happened. It's done. Okay. We have the ultra rich and we have the really, really poor. Okay. Remember the retard community that I talked about? Yeah, we're all part of that, like high middle class, lower middle class, whatever, wherever the hell you put yourself on that spectrum, you are not rich. Okay. You can have 1, 2 million, 3 million. And in accordance with that scale that I talk about, the distance between the ultra rich and the middle class doesn't compare. Doesn't compare. Going from 0 to $1 million will be absolutely the toughest thing. But to get to that first million, you got to get to the 10,000. How many in the group have $10,000 of invested capital? I'd like to know. How many in the group? I'll ask a scarier question. How many in the group have $100,000 of hard assets that are devoted to either the US stock market or international stock market right now? How many? Can I be presumptuous a touch and step out on a limb and suggest maybe I'm the only one? Nope, I just saw Becky. That makes two of us. So the idea there is to challenge smoking hard says me, I'm good. Now you get the point, right? I'm one of those guys. It's funny, man. I expect you to treat me the way I'm going to treat you. If you come on and says, Ryan, I have $12.7 million, you know what I'm going to say? You're a success. You're not going to get any animosity from me. I celebrate success. Okay? But we have to start the mental mindset in allowing people to understand that once I was there where I did not have 10,000, and it was the most difficult psychological thing that you had to wrap your mind around in understanding that you needed to change a few things. Okay? What were those things that you needed to change before you stepped into that evolution toward that first milestone? And it's not the first milestone. The first milestone is to get started. $500. Okay. Get to $1,000. Feels pretty good. 2,500. These are all scary propositions for somebody who doesn't have the first effing clue, right? About what's going on. Success. I dig it. See, there's a lot of people, and I tell you what, guys, I'm 46 years old. Perhaps maybe you want somebody that's 20 years old coming onto YouTube and proclaiming to the world that you're a self-made millionaire. That's freaking great too. I'm a little more realist about the whole situation. I'm not one of those guys that will come onto YouTube and say that making money is easy. Okay. I've made some easy money. I've made some hard money. I do go to work and I work for my money. And that's it's all okay across the board. You should be willing to accept all of it. All of it. But don't for a second come and cross your wires and try to sell me on the idea that your easy money is also hard money. It ain't. I've made all kinds of spectrums of hard money and easy money. All right. And the easy money is kind of interesting. Okay. It's a byproduct of a well-laid plan. I've said that many, or a byproduct of a well-laid investment. There's a lot of people out there making it. I appreciate you sharing that, man. Look, I celebrate success. The more we can figure this out and start to accumulate independent wealth, the more powerful we will be as a community. And I'd like to see it with more backing than AMC and GameStop. Okay. I would just like to see a little bit more fundamentals backed by it. And if it just so happens to take somebody who doesn't know shit about investing to earn money the old honest way by investing in the S&P 500, so freaking be it. Okay? Because again, I think a lot of people are looking for that needle in a haystack. They're looking for that Discord group that's going to turn them on to that next best thing. Okay. I do offer the next best thing, and it's crushing it, crushing it. Have I had investments that have not crushed it? Sure. Sure. Again, this is not there's a lot of attributes that will come out, right? Remember what I talked about the T-ball player trying to play Major League Baseball, right? Thinking that they're good at it, thinking that they can actually, compete. They strike out every time and they still come back and they still keep kicking ass. This is where day traders get into trouble. It's like, they missed that spike. That's okay. I'll get it tomorrow. They missed the spike. That's okay. I'll get it tomorrow. They missed the spike again. God dang it. I'll get it again tomorrow. And at the end of the year, you're like, Jesus, I just spent the whole year staring at charts. I think at a couple points during the year, I think there was a couple of women that were interested in me, but I was so busy staring at my charts, right, that I never even lived life. Okay. And now I'm 100 grand in hawk because I decided to engage in this futile activity that now I'm realizing I'm really not that good at. Don't beat yourself up. Nobody's that good at it. Nobody. For the long term, you get lucky. Worst thing that can happen to a day trader is they start making a ton of money and they actually think that it's um, sustainable for the long term. Can a few do it? Probably. That's the crazy thing about the stock market, man. And for those very, very few, those are the naive people who actually think that they can scale it to others. That's where it becomes very, very dangerous. Because where I would contend that there are those very few out there that can actually make a go at it, they have the equipment to do it. They've taught themselves very, very highly educated day traders, understand technicals, understand everything they need to do. Great. Keep it to yourself because you are not going to be able to transcend that. The only benefit that's going to come out of you selling your $2,500 course to somebody is to the recipient who's put in the work. All right. Once the work is put in, the work is freaking done. All right. Let's move on to the ETF. This is the 123 ETF. This is kind of cool. I share my top 10. Everybody provides their top 10. This represents 19.24% of the total wealth in the account, which it's about 28, that is 28,000. Is that not? No, there's 46,000. My bad. There's 46,000. So that's approaching the $50,000 threshold. This is split across 123 holdings. I'm about to give you the top 10 now. The top holding in the portfolio, you're going to be super surprised on this, and you can throw tomatoes at me and you can just be like, Ryan, you suck. Shell oil, top position. Next, Bristol Myers, BMY. Next is Intel. Okay. Next, another chip, Taiwan Semiconductors. Next is Gilead Life Sciences. Next is Comcast. Next is IBM. Next is Caterpillar and AbbVie. And finally, Verizon. Okay. Those are the top 10. Pretty cool. It's done really, really well for me. Those are the dividend portfolios. You want to know how much finagling I do with it? You want to know how many wrenches I do on that portfolio with the torque wrench? Is there a torque spec I can give you on it to really get more performance out of it? No. I continue. I'll provide you the top 20 just because we can and we're all friends and it's fun. Cisco, CVS, Digital Realty, Duke, Disney, AT&T, Southern Company, Medtronics, McDonald's, and finally Abbott Laboratories. Those are the top 20. Unfortunately, I can't share the portfolio with you guys anymore. That was a thing of the past. So I'll have to just convey the holdings to you. I'm a little sour on the channel right now. If you haven't noticed, if I was super stoked about social media and I thought that I would be embraced with loving arms, I could probably do daily content if I felt like I had the time to do it. I don't. I'm just in a time of my life where I cannot do that. I have an obligation to the people who I support, my family, to make a go at this, and I have a chance to do something very, very special with my career. And I'm having fun. This is just me. This is just me. Being a social media influencer is I enjoy doing the live stream. I really do enjoy the product. I would enjoy it more if I didn't feel like it was manufactured at this point because my time is vested elsewhere at this particular juncture in my life. All right. Now that's not to suggest that that won't change down the line, but to be quite honest with you, you don't need me. You hear enough in a live stream, baby, to where you should feel like it was 60 minutes well spent. I've been accused of people coming on here and listening to my blah, 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 blah. Come on a live stream. And that blah, 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 blah. But I actually say some stuff. And I know how to get through to people, and I'm a damn good teacher. All right. And the thing that sets me apart is that this isn't in a Patreon group. This isn't in a Discord. All right. I'm giving you this goods live, man. If you think I'm working off of a teleprompter, I can swear to you I'm not. This is live every Friday. And that's what makes it kind of special. I think it's pretty cool. Kurt's in the house, 179, and playing the guitar. I think we need to wrap our mind around this idea that a lot of the wealth in this country and maybe even abroad might not be in the most obvious places. It actually might be in the most unobvious places. Yeah. Don't judge a book by its cover, man. I've never been like that. Never been judgmental. I would never look at somebody else and say, you have this, I have to do that. That's not me. That's truly not me. I know there's people who suffer from that syndrome. And I feel bad for them. I really do. When I shake somebody's hand, I don't care if you're worth 40 or 50 million or if you're worth nothing. I don't care. Um, I will quickly ascertain who you are. I'm a phenomenal judge of character, especially if I'm with you in person. Phenomenal judge of character. And you will give me that insight right away. And rightly so. All is fair. You'll probably understand where I'm coming from too. I'd go out on a limb again and suggest maybe you get some of that insight on the independent investor live stream. And that's what keeps me coming back is I think I do share that through the course of each and every live stream. You kind of get an idea of what I look to put focus on. I like to put focus on stuff like this, right? This seems to me to be personal success. I don't know if Kurt inherited the whole thing. And I mean, I'm not picking on you, Kurt. I think it's awesome. Let's just suggest for a second that I throw out there that you're a self-made 179,000-aire, right? Um, but you never know where somebody's coming from. You never know, what they've been working with, what hardships they went through to achieve some personal wealth. But the next threshold for Kurt's $250,000. That's nothing to shake a stick at. And when I made the analogy a couple minutes ago in the live stream about a few $1,000,000 being not very much in the eyes of society, um, let me put that into context. We are all rich right now. Yeah, yeah. Um, we don't want to get complacent. We do not want to accept the fact that it will be ample in our future to see us into retirement as being satisfactory. I get complacent for a few minutes and I feel like I suffer for it. If I get complacent for a day or I take what I feel like is a little bit too much time off, which I do, I decompress. I take time to myself, chill, whatever. Excuse me. But when I do, I feel like there's things that are being neglected. And my friends, those things are things that are being neglected for you too. They're out there. And they're not things to be stressed about. They're things to really relish in. That's what keeps you going in life, man. Look, if you get bored in life, you're going to die. So find something. This is just one element. All right. Finances and financial stewardship, if you avoid all the bullshit, is super easy. It's super freaking easy. Um, the reason why I would suggest that it's hard is because of all the propaganda and absolute horse crap that I see people buying into on a daily basis. 2024 will be no different. There will be people at the end of 2024 who have bought into every piece of propaganda that was aimed to sell you down the river in 2024. Remember last year? Who became a bond investor in 2023? Fucking raise your hand. Admit to it. Yeah, god dang it, Ryan. They got me on that one. I tell you what, I listen to the live stream every Friday, Ryan. You gave me a bunch of armor, and I succumbed to the bond investing, and I missed the 25% at the end of the year. It's okay. You're still a good person. It's okay. Shit's tempting. I get it. But they're aimed to mislead you. Okay. I would love to meet these crackers who justify Ken Fisher. I, I don't get it. I don't get it. And there'll be professionals out there that come on. Hey, you see this YouTube guy? What a freaking what a bad guy. What a bad guy misleading people away from Ken Fisher. Really? I don't see people raising their hand and shouting for joy and suggesting that family and friends and everybody who wants to make millions and millions of dollars join Ken Fisher. And oh, by the way, you need to have $500,000 to invest with their firm, or they won't even talk to you. No shit. You can have $5 and come into the independent investor channel. I'll talk to you. Mhm. Won't charge you a dime. What's good for you is also good for me. When you do better, I do better. Does anybody else get irritated by stuff like that? I hope you do. Maybe I hope you do. I don't know. Pisses me off. I take solace in the fact that I don't play ball, right? I am a big league hitter, and I'm in the big leagues by myself. I've been on an island for a long, long time, and I'm here to tell you it's totally worth it, man. Get there. It's awesome. It's legit. Okay. The 1, 2, 3 ETF, the one that I declared, I have real money in that. That's not a joke, but I'm also not paying, you know, uh, a tenth of a percent, or 0.2% of management fees either. I'm paying zero. 5%. That's probably right. Yeah, it's probably right. When you do better, we do better. What happens when you don't do better? What happens when the market is down 20%? Do they not do better? Or is it when you do bad, we also do better? Seriously. Yeah, yeah, well, I don't know, 5%. Holy shit. Are you kidding me? 50,000 on $1 million portfolio to pay some dickhead to come onto TV and put on a suit and act like the guy just looks like a freaking crook. Do I? I I don't I don't make enough to come onto YouTube and have people accuse me of making so much money on YouTube. Most of this gig is done on my own accord, and I do it willingly. And I really do want to retain that sanctity on the channel, because that's what kind of makes it special. It's me against an institution that, look, I wish I had more faith in it. I just don't. I don't believe in fiduciaries. Um, I've had 4 financial planner fiduciaries or financial planner professionals in my career, and I can tell you I graduated from them, learned a lot from them. There's some really, really good ones out there. It's an admirable profession for those that do it right, for those that actually educate and counsel and coach. To really, really have somebody's best interest in mind is a very, very fragile relationship. And in some cases, it may just be best to tell somebody that they are ill-equipped to invest. And I would just rather have somebody self-assess and identify that they need to work on their self-education before they engage in this. That's what makes this difficult. It is. Okay. Not everybody can start in this gig and subject their money to the whims and volatility of the stock market at 18, 19, 20 years old and hold true on the S&P 500 for the next 40 years. Is that what they should do? 100%. Done. Don't need Kathy Wood, don't need Bitcoin, don't need Ethereum. No, you don't need SPACs. You don't need any of it. Hmm? Buy a CHD, buy some small cap, ETFs, index funds, mutual funds, whatever you want to do. Hold it for the long term, dollar cost average over the long term. That's what you need to do. Okay. The great quote in my Viper group, and I'm going to use it again. I've mentioned it twice. Matt Money left a comment in my Viper group. He said, if you want to be a millionaire, invest in the stock market. If you want more than that, i.e., tens of millions, start a business, because the amount of risk that you would need to take on to just turn very little into a very sizable amount is not worth the risk. When we break the mathematics down and we look at the time that you have, it's your time, it's not my time, it's your time, okay, to spend on this earth. The idea is to maximize that time that you're spent contributing to your own program, not Ken Fisher's program, not Ryan on the Independent Investor channel. I tell you what, Ryan, I tell you what, he charges $19,500 to join his private Discord group. And all he does is talk about, I don't know. I don't know what people talk about for 20 grand, $25,000, $5,000, 500, 250 is too much. Jim Cramer's charging $400 a year to join his, what is it? The investor club. $400? Too much. Garbage. Don't need it. Don't need it. He's not going to show you some needle in a haystack that doesn't exist outside the Dow 30. Look in the S&P 500, for crying out loud. You got 500 companies to choose from in there. Hell, you could probably dartboard the thing and end up more successful than trying to listen to the whims of somebody who's going to pick, what, 10 stocks for you to outpace the S&P 500 over the long term. It doesn't happen. It can't happen. It can't, for the reasons that I've expressed on this channel over and over and over and over again. Ryan, do you put your money where your mouth is? This is exactly how I've been able to accumulate this that I share with you on a very, very consistent basis. Have I deviated? Yes. Should I have deviated? No. But this is the goods. And for anybody who's coming in like a fragile egg and they're just starting out in this investing, it's on fire, Ryan. It's a scary landscape out there. I'm walking into a desert, Ryan. Help me. It's scary. I don't know what to do. What book do I read? What stock do I buy? What broker do I go with? I have no idea. Take a deep breath. Ask yourself, do you want to be an investor or not? Okay. If you don't want to be an investor, you don't have to worry about any of the aforementioned questions that you just posed to yourself. All right. Stop making it more difficult than it needs to be by inundating yourself and self deprecating yourself in thinking that you don't know enough to do this guerrilla activity. It's guerrilla. It's a man-made freaking activity. Part of it is insane. Okay. Putting large capital into stock that is what? It's not like this. I enjoy this. It's a tangible asset, for crying out loud. Hell, this is a tangible asset. I enjoy my notepad. For you guys that have known me for years, you know I'm a notepad freak. Notepad. There's a few stocks on there. Yeah, some good. Cisco, Taiwan Semiconductor, Apple Computers, Broadcom. There's a good company for you. SCHD, top holding in SCHD, right? 109% rate of return. Okay. Look at the top performer in SCHD: Comcast, Iran, Carnival Cruise Line, Hormel Foods, ExxonMobil at that 52-week low, Halliburton, Schlumberger, Total Energy, EOG, Shell, which is my top holding in my 1, 2, 3 in my Ryan's ETF. I don't know if you have a better name for it. Put it in the thread. I'll name it my ETF after your good recommendation, free of charge. Okay. Just don't sue me for the rights to your naming my ETF. All right. Newell Brands, Valero, MasterCard, Aflac, Sanofi, Bank of Santander. That's a good one. Merck, Bristol Myers, CVS, Gilead, Medtronic, Humana. Don't have that. I don't have United Health. That's an awesome company. Amgen, AbbVie. What are you getting outside of these stock groups? I mean, I can spoon feed you. I'll continue to spoon feed because it's just fun and I'm proving my point. Amazon, Boeing, which is probably a buy here because I guess they tightened up the bolts. Northrop Grumman, Costco. Costco's a good one. Pepsi, Conagra. How about Kroger? I think it's the second biggest grocer behind Albertsons. This is XPO. Microsoft, Google, Adobe, Meta, Nvidia, the Fab 7, minus Netflix, which I'm not a fan of, that go up every freaking day. It's pretty impressive, honestly. I own Microsoft, Google, and Amazon. I own big positions in them. Apple, I can't get my head wrapped around 31 times. And Nvidia, I can't get my head wrapped around 80 times. But great companies, fun to watch them go up. I own them through the index. That's great. Where Nvidia goes, the market will go. Where Apple goes, the market will go, right? So Amazon and Google are just starting to wake up. Microsoft has been on an absolute multi-year tear. So Microsoft, I don't even look at it anymore. I've owned it for a long, long time. I own it within the Roth. It's the easiest stock to own ever. So we just own those companies. That's awesome. So you get a little taste of, the methodology, but I have the tolerance to look at an Apple go down to $90, which is what it did 3 years ago. I have the tolerance to, kind of weather the storm when Amazon and Google went through their last downturn. Meta, just within the last couple of years, it went down significantly. Now it's pushing 400. Impressive. These are the things that happen in the major league stock market. Okay, makes most of the retail community shit their pants and look for YouTubers that are 19 years old to show them the way because what they have so much experience, right? I should try to find those guys, especially guys and gals, especially on TikTok, that have so much infinite experience enough to share with people, enough to where that information can actually be taken and paid forward and put to rigor and actually render results. I don't know. I won't play that kind of ball. No way. No way. No way. You got to agree with yourself on the program you put into place, and then you have to validate it for real. If you're that, that's up and sound, up and sim, and I missed it, up and sim. If that's just not working for you, I don't know. Maybe try changing up the program a little bit. Yeah. Yeah. You'd be glad you did. We got 4 minutes left on the live stream, guys. Very cool stuff. Ryan's Tacoma ETF free commission fund. I like that. That's good. I tell you what, Jamie, that's a good one. I like it a lot, man. It's very good. And that is the very vehicle that I have just taken ownership of. The bank no longer owns the note on it. We've brought that asset in-house. It's a little win for the small fry. What can I say? I work pretty hard for a living. XPO, very good. Thanks for the recommendation. I beat the S&P over the last 3 years. 10% annual return with 12. Absolutely fantastic. It's good. You can do it. You put the time in. If I would, and Mitradate's awesome. Mitradate comes on, supports the channel every week. And these are the types of conversations that I like to deal with, right? The thing about it is here from my lens, okay, the S&P 500 is the easiest asset to invest in. It is not hard. It is internally diversified, low fees, and it does in fact require zero. Your program, not knowing any of the details, will probably, okay, being presumptuous, require a little bit more management than what the S&P would call for, which is zero, right? The benchmark. Okay. So when I talk and convey a message, my message, and you know this about me, I have to convey that message that speaks to the masses, right? You are the exception, my friend, not the rule. You are the exception, not the rule. And I think all too often, YouTube and the retail community wants to fall into this bad habit forming behavior of making the exception the rule. No, no, no. The rule exists. The rule as a benchmark, the very benchmark that we compare every asset against. Why? Because you could have just as easily held that, right, for the entire previous year and garnered the results that the S&P had to render, right? Um, and absolutely, there are possibilities to far exceed the S&P returns. But those situations are possible year over year. Are they sustainable over the long term? It's yet to be seen. I wish you all the best. I hope you outpace it as many percentage points as you possibly can, because again, it's that you're uncovering a vein that is possible in investing where I'm dealing with a community thousands over who think that investing is gambling or they can't even justify putting one red cent. You come on and share a testimonial like this, a success story of somebody who's investing successfully in alpha to the S&P 500, man. And I dig it. I commend your efforts. It's awesome. Thank you for sharing. My friends, we're rolling down a little bit. I'm looking through, got some really cool comments in here, man. I appreciate it. See what you did there, Jamie. We're definitely talking stock, how you describe yourself. Very cool. Very cool stuff, man. Ryan, you fire me up. Yeah, I fire myself up. I actually leave the live stream hot and sweaty every so I put my game face on for this for sure. That's why I need a nice cool drink to deliver the goods every week. Fantastic, man. Very cool stuff. We'll end on a good note here, Becky. Happy retirement to you. Hope all is well. Happy New Year to you and the husband. Tell them hi for me. It's great to see you. Sorry you get a ninth inning shot out on the Independent Investor channel, but nonetheless, it's live and it's genuine, which is what makes me special. Guys, I really appreciate you tuning in. We should be back next week on the Independent Investor channel live stream. Have a great rest of the weekend. Be well, be empowered. All right. Share the message. If you know somebody, bring them onto the channel. Something that I've noticed and some other folks in the community have noticed is that YouTube has just kind of left me on my own. I do enjoy that to a certain capacity, but I feel like there's a lot of people out there that could probably benefit from the empowering message that I deliver. And it is empowering. I'm empowered personally by it. I'm empowered by the opportunity to share it with those folks out there that, like I said, if we can get to the extreme minority out there that is really looking for a solution that works, that doesn't have to trust the system, that doesn't have to trust an institution that, by my admission, is out to get you, right? This is the spot for those folks. Bring them onto the channel. We'd be glad to have them. Guys, thank you so much for tuning into this fast as 60 minutes on YouTube. Be well. We'll catch you next week. And all the best to you. Check you later.